they had a set of citations after US FDA observations, and it still recovered from its day's low, down at about 2%. But a number of volume buzzers today also in the market, which we'll come to in just a bit. Overall, and let's just pull up the advanced decline ratio and the heat map once again on what kind of a picture that we're seeing. We started this morning talking about how the Fed meet becomes the key focus now, from now on till tomorrow morning. And that's really the theme we see on the India market close as well. So if you look at how the indices are performing, and you see that kind of uncertainty, a bit of recovery there towards the end, but you see that kind of uncertainty playing out in the markets all day today. The bets are being hedged, and perhaps that explains a bit of the weakness in the IT pack as well. Auto has interestingly not had half bad a day, and there was a Moody's report as well on the India auto companies and their performance. Maybe that has helped, but overall that's the picture panning out. Niraj, any interesting themes that you're spotting?
No, I mean, I think power and to an extent what's happening with autos this afternoon, possibly for the last few days as well. And it'll be interesting to talk to our guest today on that. So let's kickstart that, Tamanna. Jay Bala, founder and chief market technician at Cash the Chaos, joins us right now on the show. Jay, good having you and talking on television after a really long time. But thanks for taking the time out and being with us.
Thanks for having me on the show, Niraj. It's good to be here.
No, the pleasure is entirely ours. So, Jay, tell us, firstly, the construct. Are you constructive? Are you skeptical about what the indices do in the near term?
Yeah, it's a bit ambivalent, but if you recall from our August conversation, I pointed out the fact the medium-term setup was such that the markets needs to dip into the 2022 low of 1887 and then to make record highs, and that's exactly what the market has done. And right now, as we speak, the markets are coming into an exact resistance. And if you had spoken to me yesterday, even before today's volatile move, I would have said the same thing. The market is due for a pause, at least. If not, a reversal is due for a pause. But what's more susceptible, or what's looking more susceptible, is actually the banking index. If the banking index were to break 46,500, that would make this probability of a reversal pretty high. So watch out for the banking sector. That's going to be the key here. If it were to go below 46,500, I would think the markets are due for a interruption, at least, to the bull run.
So do you expect, I mean, because I've heard you use the term pause and interruption both, is this a minor interruption which gets bought into, led by banks? And at the dips, what is it that you would keenly watch out for? Which have been the strongest charts recently?
Yeah, obviously, I'll start with the strongest point. It's been the autos, and within the autos, it's the two-wheelers, more than the 3 and 4-wheelers. Two-wheelers have been the strongest, and within the two-wheelers, TVS Motors is the strongest. So when it comes to the overall broad markets, I would look at 2,500, 22, and from a medium-term perspective, 2220, the earlier high of Nifty to hold up, if this is a buy of the dip. But if that were given, I would think this is a larger interruption than anticipated. So we need to see further price action. But the banking index is looking very susceptible, like I just said. So I still don't know completely if this is a buy on dip or if it's going to be a larger interruption. But since we play with the trend, I'll take it as a pause within the major trend.
Jay, very good afternoon. Tamanna here, and we're absolutely kicked to have you on NDTV Profit. Because you were speaking about TVS Motors, sort of a milestone day for TVS. It's hit the 2,000 rupee mark, for the first time. And two-wheelers and auto overall have been shining in today's trade. Just a view on TVS and Hero, if I can add. Is there more steam left as per the charts?
Yeah, I definitely believe TVS has got more steam left, but Hero, I've been bullish since about 2,900 odds to 3,000 levels, and it's come up to about 3,800, and the momentum there is waning a bit. So if someone is trying to pick up a trading bet, they should be looking at TVS Motors rather than Hero Motors. So within that space, I would rank. When I say within the space, I mean the two-wheeler space. I would rank TVS Motors the highest, followed by Hero, then followed by Bajaj. So that's the pecking order for me within the two-wheeler space.
TVS at 2015 now looks like a sell position, or there is scope to buy. And what about Bajaj? If anything specific that you can add, Jay?
Yeah, I mean, in a sense, it's definitely not a sell. Basically, you don't want to stand in the front of a very strong trend. So you just want to wait for the trend to weaken if you're trying to sell into the strength. But, you just need at least a one-day reversal. Even that's not coming. So when it comes to Hero, I think further highs are due of close to 4,000, but that's limited upside there. When it comes to Bajaj Auto, once again, the new high that we've seen about 6,300, it's coming with a lower momentum. So, it's a bit of caution out there. So if you want to sell into this, wait for a break below 59.90. Until that, don't do anything. It's a Bajaj Auto is do nothing space, and for 59.90 is a trailing stop if you're already long.
Jay, first time that you're joining us, give us some ideas, give our viewers some ideas, something which they can trade, keeping in mind that you expect a bit of a corrective move.
That's right. The biggie, Reliance Industries, post its demerger high, it's come down in 5 steps. And then the recent high of about 24.75 is a near perfect 61.8 Fibonacci retracement. And the last 2 sessions have been weakening. So the market is giving a message that there is a potential for this to go and retest the October low. So a risk level of about 24.75 and trying to trade short for a potential to break 2200. That's the best setup I have here. And it's coming right at the Nifty resistance of about 21,100. So that's the top setup for me. And the next one is a weakening setup in Godrej Consumer. Godrej Consumer, if it were to break 1,010, that would signal the next leg of the down moves coming through. So place a stop about 1,065 and look for a drop to about 900 for Godrej Consumer.
Please stay on with us, Jay. I just want to quickly go across to my colleague Himansh on the research desk, who has compiled the list of volume buzzers for the day. Himansh, take it away.
Thanks. For the volume buzzers, you have Tamanna platforms that tops the list today, and the volumes are up over 38 times their 30-day moving averages, 30-day averages, and we are seeing it pair gains to trade 15% higher now. It surged as much as 20% intraday today, and the stock has broken out after seeing a bit of consolidation for the better part of November. And similarly, quite a similar case that we are noting with Nazara Tech as well. We are seeing a breakout after trading mixed for the past 2 weeks. Its volumes are up nearly 24 times, that it has gained as much as 8.6% intraday today. But if we look at Suntech Realty, the volumes are really up on account of large trades. 69 lakh shares exchanged hands on the exchanges today, which is 4.7% equity. As reports suggest that Starlight Systems and Sadhguru Info have announced their plans to pair 4.1% equity stake, and that really might be what's weighing on the stock here. Similarly, Bank of India is also down on account of 1.4 crore shares that changed hands, and the volumes are also up 9.4 times. And lastly, you have PI Industries, where it slipped in trade today. You're seeing a bit of reversal here, where despite Motilal Oswal retaining its buy rating today, it's trading in the red, and the brokerage expects growth momentum to sustain on the back of its 1,800 crore order book, as well as its recent acquisitions that are expected to bear fruit in the near term.
Thank you so much for that, Himansh. Quick couple of questions to Jay. I don't know if you have a view at all on Tamanna, Nazara, but I also wanted to ask you about ITC. ITC had sort of a slew of reports after their management presentation, their investor presentation, off the day's highs, and didn't frankly show too much momentum, even though fundamentally there were some interesting things they said. So view on ITC, Jay, and are you tracking Nazara, Tamanna kind of counters at all?
Yeah, see, let's take on ITC first. ITC it has weakened considerably since the last couple of months, but it's still considered the trend as major trend as up. So as long as it doesn't close below 430, I would still say stay on the positive side, but not too aggressively. So just a mild positive for ITC. When it comes to Tamanna, I've seen that a few times, but it's had a major drop from 2,100 odd levels to about 400. So but the bounce from the lows of about near 400 has been quite convincing. So at least one more push above 1400 has a potential for Tanla. I don't track Nazara that closely, but but it's. I don't think this is tradable because the stops are quite wide. At 1084, you want to place a stop above 900. If you think that's affordable and 1400 is a reasonable risk reward, then there is a setup for you.
All right, so 900 at the bottom and 1400 on the top, thereabouts, for Tanla, which has really been the buzzer of the day. Jay, thank you so much for joining us. Absolute pleasure speaking with you on NDTV Profit, and look forward to many, many more conversations. Jay Bala there. We're going to take a very short break. But on the other side, we bring you a special conversation with Niraj, CEO Institutional Equities at MK Global Financial Services, and Manish Sonthalia, Chief Investment Officer at MK Investment Managers. All of that after this break. Stay tuned. Welcome back. You're watching the India market close, and markets have recovered from their day's low. It's looking like a pretty decent close compared to the pressure that we faced through the day. The question is, what next? We're on the eve of a big news piece which will come in overnight. How do you strategize in a market like this? We have two very special guests joining us in our studios here at NDTV Profit. I'd like to welcome Niraj and Manish Sonthalia, who are with us today. Welcome. Thank you so much, gentlemen. Great to have you here. Manish, let me begin with your take on directionally where we're at. We've hit the 21,000. We've receded a bit from there. Are we going to have to wait for a bit of a correction? Is a correction/pause around the corner?
I mean, a 5 to 7% correction can happen in any market without any reason. So, first of all, in India, we don't have a reason for a correction, but it can happen. Just because things have got a little overbought, non-stop rally from 18,500 to maybe a 21,000. All those factors could be reasons. But fundamentally speaking, I think, it's a buy on dips market. It's a buy because you'll be stepping into January, you'll be having the earnings season. By and large, earnings season should hold out as per expectations. And Nirav can throw more light on this. It should not disappoint anything majorly. And as we step into projecting FY26 numbers, because FY24 is coming to a close and you always project next 2 years of numbers.
Oh, you reached FY26 now?
Yeah, absolutely. FY26, Nirav, FY26 numbers are getting projected for all companies. So, firstly, we were not expensive even on FY24 numbers. Now, if you're looking out at FY26 numbers, it's just a matter of time that we'll, crawl higher.
Yeah, we had a vision document of 28 just yesterday. So, yes, in that sense, projections are there. The question is, how believable or credible are those projections? Do we know enough that uncertainty is behind us? Buzzword for the last 2 to 3 years was uncertainty. Is that no longer the buzzword?
No, if you see the high frequency indicators, we really don't see too much of a negative surprise. I mean, oil is below where our comfort level is. Inflation slightly on the higher side, but still within control. If you talk about corporate earnings, it's jolly well fine at 15 to 20%. Few sectors could be here and there for, let's say, a quarter or two. Quarter 3 could be furlough season for the IT, or consumption may be slightly weak after Diwali. All of that get reflected. But on a longer term trajectory, the broad, all well-known story about India, demographics and BFSI, the savings and all of that. I mean, I don't see a problem of a 15 to 20% growth, and it's just that as we progress into time, many more new highs would be seen in the market. I mean, that is how broadly I would look at it. But you may call me a eternal optimist, but I would feel it that way.
That works. Optimists have made money, so no complaints there. Well, same question to you actually, Nirav. The worries of 2023 are slowly receding. Is the stage set for substantial gains, or do you reckon 2024 could be a year of consolidation with maybe minor positive biases?
So, same group company, but very similar views, so super bullish.
Super bullish.
Yeah, so on the economy, and we'll talk about markets as we move on. Just look at it. How many countries last year have seen their GDP upgrades by 70 basis points? And we are talking about a $4 trillion economy, right? So we just joked about 28. Incidentally, I think the PM office will release a 2047 document, right? We are expecting we want to be a developed economy status. So something is going right. And now in hindsight, we know that we have run a very, so we are very conservative in terms of our fiscal position. We are very conservative in terms of monetary policy, and we are very conservative in terms of our banking, the way we are running our banking system, right? And then we talk about the digital infra and the physical infra and stuff like that. So it has taken 6, 8, 9 years to set up the building blocks. The reason you want to look forward is because you can look forward. And that gives you the longevity of the P, right? For the first time. What does an election do to you? It gives you longevity. I expect this continuity over a slightly longer period of time, which means that I can look at slightly long dated earnings. That gives you P. how many, you got 3 or 4 countries which are ahead of you, right? So he's completely right that, you'll have some corrections along the way. You will never have uncertainty out of the way. You'll start worrying about something else. That is the nature of the beast. But the fact of the matter is that, and this is what my father taught me, that you had emergency in 1976, you had nationalization, you had scams, and all this while, even before the FIS came in 1992, markets had done well. BSE was 100, right? And then your 2000, 1978, it was 100, right? And because the fact of the matter is that your GDP grows every year, every day your profits grow, and therefore markets will eventually move up. So, but I believe that we are very, very well set. Only we can kill our own dreams now.
Okay. Now, I want to take one quick question, and we'll have to slip into a break as well, but one quick question. I remember a conference that MK had wherein you were extremely confident about the commentary that came in post the conference from a large degree of SMID companies.
Absolutely.
Right?
Absolutely.
Yet SMIDs are the one which have done well, large caps haven't. A lot of people are saying 2024 will be the year of the large caps. But the more promising names are happening beyond the Nifty, right? Power financing, massive bull, power ancillaries, superb run, defense, etc. So are you as a house and both of you individually, are you constructive on the broader end of the spectrum still? Or are you tilting towards large caps?
I think, again, the story of India over the next several years will be the broader participation of the economy. And that is actually what you are saying. I call it democratization of the earnings. Right, I'll just give you some data. So if you look at the last 4 or 5 years, you would have roughly about 800 odd companies going to about 1,000 companies in BSE small cap index. Their profits have almost more than doubled in the last 4 years. Today you got about 1/3 of the small cap companies earning more than 200 crores. This figure was about 15% 4 years back, right? So whatever upgrades you are seeing in corporate taxes, the upgrade that you are seeing in the earnings is being led by the fact that you got plethora of companies, right, which are doing very well. And please appreciate the fact that all of us have a feedback mechanism. Right? Because you had a situation where a lot of the companies like Bajaj Finance and Kotak and SDFC got re-rated. You are sending positive signals in terms of how banks have to be run. And therefore, a lot of the banks understood that the way to grow market value far ahead of the book value is by adopting less, better underwriting standards for loans and stuff like that.
Yeah.
So now there is not a single small or mid-cap company I would have met which doesn't talk about ROC and ROE. Right? So it's getting very competitive. Right, so Manish can add, but I think that opportunities are endless.
Niraj, when we are investing in the alternate space, let's say PMS or AIF, I would believe it is all about stock picking, right? If there was to be an allocation, agenda in front of investors, if it was large caps, people would go to ETFs, people would go to large cap mutual funds. Plus, I think what Niraj is saying is absolutely correct. A lot of wealth is going to get created in the next 10 years in many young companies today, which will become large companies. And if you're early in realizing those things, you'll ride the growth story. Now, when you talked about, let's say, energy, this is one of the themes in the product that we launched, right? And mind you, and in spite of so much of communication in the media and so on, COP28, let's say 2017, net zero and all of that, and we know that it's a transition that is happening from, let's say, fossil to renewables. Entire gamut is going to be very large between now and 2030. The sooner you realize it, the better for us.
You're the second person to say this only today. And the conversation about renewables...
Green energy is not a 1 year, 2 year theme. Or energy is not a 1 year, 2 year theme. Mind you, if India has to achieve 6 to 7% real GDP growth, we are underinvested on energy. And unless we up the ante on energy, we are not going to realize that 6 to 7% growth.
Okay. So hold that thought. We'll slip into a quick commercial break, but when we come back, let's explore this further and try and probe the 2 or 3 things that you guys believe are the key mainstays, right? Slip into a quick break. Be back in conversation with Niraj as CEO of Institutional Equities at MK Global Financial Services and Manish Sonthalia.
welcome back. You're watching India Market Close. Time for a quick F&O check. Nifty expiry, Bank Nifty expiry day. Agam Vakil joining us with more on that. Where do you think it's going to end?
Right. Well, Tamanna, we are keeping an eye on 47,000 as far as the Bank Nifty is concerned, but I'm going to quickly talk about the Nifty. Unwinding in open interest as far as those positions go, flattish movements coming in as far as the benchmark is concerned. For the Bank Nifty specifically, as I was mentioning, it does seem like there's been a lot of accumulation, a lot of consolidation around 47,000, and that's exactly where we're expecting today's weekly options expiry to end. We have seen 7% increase in open interest. Coming down to the Nifty, we continue to see maximum open interest around the 21,000 call, and perhaps a little bit of support provided by accumulation in open interest around 20,800 and 20,900 puts. In terms of changes in open interest, let's take a look at that one as well. And as one might expect, it is essentially 21,000 where we have seen the most amount of addition in open interest towards calls. Finally, coming down to stocks which have seen the most amount of increase in OI, we do have shorts building up in PI Industries, Apollo Tyres and Ultratech Cement, and longs in Pidilite and Metropolis. On the other hand, when it comes to stocks which have seen an unwinding in open interest, about a short covering coming for Alcon Laboratories and Birlasoft along with Bosch and BPCL, and Granules looking at unwinding. But again, to answer your question, we are keeping an eye on 47,000 on the Bank Nifty, and it does seem like the way things are panning out, we're likely to see expiry coming through around that mark as well.
All right, thank you for that, Agam. Well, markets back in positive territory after a fairly tumultuous day. We're completely flat, but yes, good levels of recovery. As we are winding to close. IT is still not finding too much support or relief over there. The entire pack is down in the red. REC, PFC continue to be, stellar performers on a day like today. And I just want to quickly pull up Ultratech, because Ultratech is our stock of the day. They've crossed a milestone as well. We talked about TVS a short while ago, but Ultratech also crossed 10,000. They've receded from there at, 9740, down about 1.5%. But yeah, nevertheless, a big day for them. Let's go back to our conversation here in the studio. And, before we went into that break, we were talking about the renewable energy push and how that's the big story. Just in the context of Ultratech, they've said 80% of the energy they'll use will be green energy by 2030. In the last few days, a slew of companies have set such targets. I just want to ask you that when you hear such targets, how do you sift on how much of this is greenwashing, how much is real, and how much is really going to turn into something? Let me start with Manish first on that.
I don't think we have a choice. What we have articulated as a country in G20, in COP28, we have gone and signed 2070 net zero. We have set ourselves targets at 2030, 500 gigawatts or 450 gigawatts renewable. Within that, let's say, solar is going to be around 300 gigawatts. So we have given all the details as to how we are going to do it. Now, the whole thing is that everything has to get boiled down into action at individual companies levels, etc., which the companies now today are articulating, that as opposed to fossil fuels, we are going to move to green energy. So I think it's a very positive step, and for the simple reason that, as opposed to fossil, green is more cost effective. It's more local than geopolitical. You don't have to rely on Saudi Arabia and Iran and Iraq. I think, you have an advantage in terms of, regulations in your favor. Government is giving so much of incentives in terms of PLI to set up renewable capacity and so on and so forth. So I think all of this is a reality. It's not a fiction. Adaptation of this may take some time, but it's surely around the corner. I mean, we are talking about some 175, 180 gigawatts renewable. When we talk about, let's say, 450, it's more than double, right? Even if we assume, let's say, 50, 60, 70% of this, it's going to mean a lot. And, you have these same companies which today are small, which are going to become very big. The guys who are financing them are going to become much bigger. And look at the valuations of some of these companies. It's very mouth-watering, I would believe, in terms of dividend yield. You may say that these are PSUs. I don't think market has an apathy towards PSUs any longer, because you search for profitable ideas. We have seen the defense companies get created. One of the biggest wealth creators. There's no problem with the defense company. I think it's a different way to look at India now, in terms of the construct of enterprises which are making profits, where the outlook of profit is good and the valuations are very palatable. You'll have tons of money coming into them.
Just a word there on IREDA. In this whole green energy kind of scope, any view over there on stocks like IREDA? And when you're saying, you're looking at companies which are willing to go green, to spend on going green, in terms of profitability, in terms of how attractive they are, what are the parameters you're looking at? Intent, money they're spending, or efficiency and ability to achieve those targets?
So I agree. So one thing I'll just agree to what he's saying is that this green energy and stuff like that, climate change is no longer a narrative. So it's an existential crisis. First, you have to accept that. That's very clear. What it does is two things. You have to delink your capital expenditure from profitability. It's exactly like that electric vehicles is the future. There is no doubt about it. You don't know the pace of adoption. Yeah. Now, whether Maruti makes money or not, whether Tata Motor makes money or not, whether TVS Suzuki makes money or not, you have to invest in electric vehicles because that is the future. So a lot of the things are coming together. One thing is this entire shift towards renewable and the green energy, right, it is forced onto you, and that will have its own level of capital investment and stuff like that. We've done a lot of work on green hydrogen, right, and the targets of $2 and less than $2 and all. Let me tell you that we don't have a great path to profitability.
Yeah, I was just going to ask.
Absolutely. So we don't know clearly how it is going to happen. We don't even know exactly how the electric vehicles are going to play out. I suspect that Tesla now is very likely to come to India, and at $24,000, if you read the book, it was a vision statement 15 years back that I'll keep on reducing the prices no matter what. That is his business model, right? So it's a question of time. And there will be implications in terms of what that happens. So it is less about the sectors. It's about the fact that it is more investments in the country. There'll be winners, there'll be losers. It is nothing. It is like you would have argued that, airplanes have come and therefore what's going to happen to trains. I don't care, because at the end of the day, the productivity increases is dramatic, right? So you are going to see something on those likes. To me, you are entering. So you've not even seen, for example, the corporate capex, right? We're just talking about it. But I'm almost willing to underwrite that as we move 6 months, 9 months out, you are going to see a surge in corporate capex. And I think my sense is that when you're talking about PSU banks, they are the ones who are going to write a 10,000 crore check.
Wow.
A lot of the private banks, they've been too obsessed with granularity of retail lending because that is what the markets have rewarded, right? And suddenly when it comes to writing project lending and stuff like that, I won't be surprised if PSUs actually grow faster than the private banks. And I think somewhere the market is telling you that, including REC PFC, right? Because who is going to finance these green projects? There's an element of risk.
Exactly. So, if an assumption that, with not an assumption really, the outcome seems to be at both of your end that PSUs are doing well. A lot of these businesses have gotten a tailwind of strong government push in policy, which is aiding visibility there. So, within this bucket, there is defense, there is PSU financiers, bank, power financiers, so on and so forth, and there are a clutch of other names as well. Where is it that you would probably be comfortable laying your biggest bet at the PSU end? Nirav, I'll start with you.
So my sense is that I am looking at corporate lending, right? And people will assume that it is not very profitable because today 90% of my lending is BBB and above, right? I think that is going to change over the next several years. You just don't have a very viable bond market in India, right? So I'm looking at growth and I'm looking at profitable growth. That is one thing that I see a great scope for that happening. I think we are also underestimating the power of what you would now call the account aggregators and stuff like that, right? So that is an equivalent of the standard FICO scores or CIBIL that came about, right? So we fret quite a bit about the risk in the system. I don't see anything, right? So you're talking about less than 50,000 rupees loans, which seems to be facing some problem. That is 0.3% of personal loans, right? So it doesn't figure anywhere on the charts. But I think across you talked about the PLI manufacturing, the EMS companies, a lot of these companies are there, a lot of opportunities are there. Now, I think, please don't get us wrong, it's not that we are asking you to go and buy something tomorrow. I'm just saying in some of the cases, the valuations are ahead of the story. In some of the cases, stories ahead of the valuation, which is fine, right? So that is the second lot detailing that you want to do. But there is no doubt that a lot of these companies have massive opportunities, and we're not even talked about China plus one and now Europe plus one and all that.
Exactly.
Right? So a lot of things are falling into place, Niraj.
No, and we will talk about some of them in later conversations, but specifically to the PSU basket, because they were so maligned. If you had to place your biggest bet, where would that be? Within
Even
the
PFC, REC, because there is no way for you to play the utility renewable chain in a leverage way.
Except for these.
You'll have to hunt for small companies. You know, there'll be some transformer company over there, there'll be some capital goods company over here. But you want to take an aggregate bet, and it's a leverage bet.
Then
Absolutely.
you can do this. Okay, that's a pertinent point. So that's on PSUs, and thank you for that, Nirav. Manish, to you, there is beyond PSUs, there's a wide bucket. You've told me in the past that you've got nerves of steel, so small shakedowns don't matter to you. If you had to bet on one key theme for the next 3, 5, 7 years, because I heard you say that the stories are for multiple years, what would that be?
Consumption is an evergreen theme today.
But evergreen may not necessarily give you the biggest bang for the buck, or will it?
No, that's the whole point, that, as the earnings keep on going higher, you want to push the valuations even higher. That is one.
So what within consumption then?
Anything discretionary. I'm not betting on staples, but discretionary. A direct play on the demographic per capita income, and for the last 2 quarters, this sector is down. Right? Similar is the story with IT. If artificial intelligence is going to push up enterprise spending in technology, India will gain out of it through the making of applications. We may not be the inventors of the technology of OpenAI, right, or ChatGPT, etc., but we'll make applications like we did when Y2K disruption happened, when the social media smack happened, when the cloud computing happened. We were all participant to that. And currently this thing is again in a very nascent stage, where there will be small companies, there will be mainstream IT companies which will all benefit out of it through business coming from the technology innovators. I think these two themes is good enough for creation of a whole lot of wealth for individuals. But you've got to keep that faith that, this thing is not going to die out. Right? I mean, any consumer company which makes gross margins in excess of 50-55%, they do have a moat. So you may say that the valuations are very expensive, but having a 50 plus gross margin is very difficult. And if these are sustainable, and these companies even have a 20% sort of a growth, then valuations will only expand. You have known all the retailing names. I don't want to take names, but look at Trent, etc. I mean,
anything in IT? Anything in IT you like in terms
engineering
of the AI
R&D
play?
companies is going to be the next flavor of many years to come. India is going to become a hub. We saw recent listings, etc., right? And the earnings is very fine, I would believe.
Just one question, if I can ask, and of course there's so much enthusiasm, optimism in this newsroom, in the markets as well. But as a cautionary note, when you have such a huge tide, everything lifts. All of it may not be worth it.
100%.
There is a concern of stepping onto landmines, also for a lot of investors who may not have the wherewithal, because everything is buzzing. What would be the filter you would apply if, for any of our viewers who are watching, and I'll ask this to both of you, the top 3 things you would look at where that red flag should go off?
Some track record of profitability, right? Typically in and around the cost of capital, literally at around 15%. I would believe the management integrity check needs to be very thorough, and particularly when you're dealing with small and mid caps, you are bound to step in a field of landmines where you have to be very careful. Structural businesses, don't buy too much of cyclicals because that can give you jagged curves on the ups and downs. Palatable valuations, because everything at the end of the day is, your profits into your multiples. That will determine how much returns you are going to make from that company. And business should not get disrupted, because today we are living in an era of disruption where everything tends to get disrupted. And a lot of terminal value as opposed to what is being seen as the explicit value. I think if you have these 5 checks, irrespective of whether large caps, multi-cap, mid-cap, small cap, we are fine. Growth will take care of valuations, and I think India is a growth market. Growth strategy should work well.
Nirav, you want to add that? Manish put it 5.
Yes, so he's an expert, so his job is to manage money, and therefore he filters this very well. But for investors, I have a very strong view that you are better off getting into a mutual fund or an ETF. It is not easy. It is not easy to consistently generate alpha. people don't do it over a long period of time. It's very difficult. You've got technology that has evolved significantly now, right? Which means that you can actually have a Nifty link ETF. I keep on telling my children that I believe that I can invest very well, but if I have to bequeath my wealth, I'll give a Nifty ETF. I think about this a lot. What is that you want to give that can last for the next 50 years? I cannot think of anything other than Nifty. So to say that his job and therefore he'll have a lot of checklists, for a common investor who is using a lot of other things to try and assume and simplify, it is not an easy job. It's not an easy job.
That's more of a penetration story. I would believe that equities as a percentage of a guy's savings pool is just about 5-6%.
Nothing.
So that has a propensity to go up. So how do you start? But there will always be a scope for active investing. There will always be a scope for passive investing.
So, so I'm saying they should come either to active investing or to... that is what I'm saying.
No, but या तो मनीष को पैसा दो या तो ETF में पैसा दो.
I'm not trying to hit your business.
What I'm saying, you do your own introspection, understand your own temperament and, palatability of your risk appetite, I mean, then decide, I would believe.
Gentlemen, such a pleasure. Thank you so much for taking the time out and being with us.
Thank you so much. Pleasure being here.
The pleasure was ours. And well, that's a lot of optimism, and I'm sure our next guest kind of exudes that as well. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, with us on the show. Sudeep, great having you in our opening week. Thanks for taking the time out. Thanks for being patient with us. How are you seeing, Sudeep? The markets have bounced back today as well. What's your construct on the markets currently?
Good afternoon, Niraj. Good to see you back on television. I mean, we've been speaking online, but good to see you back on television. And when I was told that you guys are coming online, I had to be here. I probably would have been there yesterday itself, but I was traveling, so that's why I said I'll join today. As far as Indian markets are concerned, Niraj, I think I would exude the same confidence level. We are pretty bullish on India. We are pretty bullish on Indian capital markets. Multiple reasons, and I think this has been said again and again, but I'll repeat just for the sake of repeating, is that there is too much of money sitting to get deployed in India. Foreign investors have deployed close to 3.5 trillion in China. And their investment in India, even if you include the recent ones, probably will be 0.6, 0.7 trillion. So now we know they, and most long-term and structural investors do want to move some part of the money from China. And even if 0.5 trillion, 1 trillion moves out of China, and maybe 60-70% of that comes to India, that means we'll be doubling FII investments into India. And we can imagine what kind of impact that will have on Indian equity markets. That's point number one. Point number two, I will say, we used to talk, and we've been talking for a very long time, Niraj, you and me. But now what is happening is a $2 billion plus is the SIP incremental inflow into the market on a monthly basis. So, assuming about 40-50% of that is for equity, I think that again is a sizable kitty. So the sheer liquidity is there to push Indian markets up on a continuous basis for a very, very long time. Now, on top of that, of course, you have the structural factors, you have the basic, the ingredients of the market which have been set right, whether it's the Jan Dhan, whether it's the Aadhaar, whether it's the PLI policies, and multiple other things which have significantly helped India. The last point I'll mention on the structural part is, in spite of geopolitical tensions, I think we have to a great extent flourished predominantly on the back of the fact that we have continued to access oil at reasonable prices. And the way the global oil prices, even today there were some major discussions in the global forums where we gather that oil prices are here to remain low for a significant period of time, which does help India in a big way. So I think it's a Goldilocks scenario, confluence of positive factors, and we should be. I mean, I don't know what will happen tomorrow or day after, whether markets will come down or go up by 50, 100 points. The US Fed decision will come and markets will react one way or the other. But the fact remains, if you take a medium to long-term view, I think you can't be going wrong in selecting India or betting on India.
Sudeep, hi, Tamanna here. Great to speak with you, and that on a day when, we are awaiting the Fed's decision. You mentioned that briefly. Is that a concern or at all? on what that decision may be or what the commentary may be actually, because everyone's expecting a pause, or is it just a blip on the radar right now?
Well, Tamanna, I think the commentary will be watched carefully. I think there are a lot of expectation building up on a bit of a dovish policy stand, and probably some indication that probably in the next calendar year, post the first half, second half, rate cuts will come. The guess is between 75 to 100 basis points. Now, all these are in the realm of speculation. Actually, what will happen, whether the US Fed will really come out with a dovish policy statement or they will maintain a neutral stand, it's a matter of debate. To my mind, there may be an initial reaction if the statements are positive. There will be buying, and markets may move up if the statement is positive. But if it's not, I think market will digest that and move on. We don't expect anything major happening in this US Fed policy.
Sudeep, the day today is punctuated by some serious gains to almost everything related to power. I mean, NTPC is the top gainer on the index. Then we have the PFC, REC twins doing very well. Some of the smaller names as well, which are power ancillaries, are doing extremely well, the likes of Inox, etc. This space has long flattered to deceive. The last 6 months have been anything but that. Is the juice out of the way already, or has already been done away with? Or do you believe this is just the start of what could be a multi-year run for power financiers, power generators, power ancillaries, what have you?
Niraj, I believe that power rally or power bull run is here to stay for some time. I have been bullish on NTPC for a very long time. I think more than a year, and I've been recommending pretty much people to buy NTPC. And that has proved right. But even at current level, close to $300, I think there is no harm in looking at NTPC. Look, NTPC, we know, was a leading power player in the traditional energy space with a fantastic back-end and front-end integration, efficient manufacturer. But now there is a completely new company which is emerging with a significant focus and significant capacity on the green energy side being created. So I think it's a different ballgame altogether. The power demand is shooting through the roof, which is leading to NTPC placing fresh order for boilers on BHEL, whereby BHEL also is getting buoyant. And on the other hand, the green energy expansion. So at some stage, value unlocking can happen by probably segregating NTPC into two parts. One doesn't know, but even if that doesn't happen, I think it's a good bet. I will also like to add Tata Power to that kitty. I think their focus on green energy and renewables is commendable. They are moving out of low margin projects and entering into high margin renewables. The Mundra dispute resolution also does help. That's company specific, but that definitely does help Tata Power. They're also moving into transmission overall, beyond distribution, and that's a good sign. So I think, both Tata Power and NTPC can definitely be looked at even at current levels. But I would request investors looking at power at current level is that come in for a bit of a long term. I don't know markets may go up or down tomorrow, but if you have a 1 year plus time horizon, you can buy both Tata Power and NTPC. I'm not talking about the power financials today. They have already moved up significantly in a very short span. So, it's good to buy them for long term, but the time to buy them may be a bit later when things stabilize a bit.
Sudeep, just a word from you, and we spoke about energy financials, but the broader financial space, NBFCs as well, of course, and your PSU bank run, PSU versus private bank run. Any sort of view over there that you're building and what you find interesting?
Well, there's absolutely no doubt, Tamanna, that BFSI will do well. If you are bringing in a GDP growth of anywhere between 7 to 8% for India for the next few years, I think the BFSI should grow double of that. That's the normal thumb rule. So we are expecting about 16, 17% year-on-year growth for BFSI coming in. And if that does happen, I think the entire BFSI sector will do well. Now, out of the BFSI, I picked up some conversation you guys were having with friends from MK. They were very right about one particular point, which is that PSUs will disproportionately gain in a scenario where large private capex starts. That is absolutely correct, because the private sector lenders are today not structurally equipped to handle large projects. Project financing is a different skill set, and by default, I think large project requirements will go to PSU banks, and they will cut the larger checks. So the expansion of the book, as far as BFSI is concerned, will predominantly happen on the PSU side. And remember that PSUs are not the PSU banks are not the PSU banks which they were 5 years or even 10 years back. They are reformed. They are much more well structured, well equipped to handle things. So I am positive on PSU banks definitely at this stage. I'm not saying private sector banks are bad or anything like that, but the more proportionately more growth will come in PSU banks. So if somebody has to look at a bit of an aggressive bet on a BFSI space, they should look at a Bank of Baroda. They should look at a PNB. Of course, State Bank of India is a good buy any day. So these are my bets on the BFSI side.
Okay, Sudeep, stay on. I'll one final question with you, but need to just mark the markets at close. 20935, we are ending in the green. Just such optimism really in the markets, and what's led the markets is not banks, not IT, but the others coming into play. I think that's the beauty of the markets today. Mid cap up about 1%, small caps too should be green, in the green, and just the heat map, it'll show you power there, it'll show you autos there. I think that's the beauty of the market move today. Look at NTPC up 4%, Hero MotoCorp up 3%, Adani Ports up 3%, so a lot of stocks have just done remarkably well. A lot more green than red on the screen, and this is despite, by the way, as I said, that heavyweights like Infosys and TCS are trading in the red. So net positive, optimism, powerful rally, and Tamanna, the pun is intended, a powerful rally.
Powerful rally with PFC and REC, you can say nothing else. They were about 8-9% up. Let's just take a look at where they have closed on our watch list definitely today. And they've just had a massive run. What has worked and what has not? So the IT pack has had a bad day. They've been laggards, but you look at Hero Moto, you look at NTPC, Adani Ports, all doing fairly well in the mid-cap space. If you look at it, you have, again, TVS, big day for TVS today as it crossed that 2,000 mark and held well above it. So TVS Motors ends the day at 2025. Prestige had a good smart recovery today, up 5.5%. HPCL is another one I would talk about. Trent has been doing fairly well as well. What has been lagging? Well, Paytm, Bank of India, both have had a pretty rough day. Bank of India because the QIP finally opened today, and so that is coming in. Laurus Labs had also a bit of negative news this morning in terms of US FDA, and that has weighed on it. Z Entertainment also, everyone's waiting and watching whether there's some clarity on management there ahead of the C-Sony merger, so that was down about 1.5%. But I want to see where Tanla and Nazara, the sort of buzzers of the day, have wrapped up, and Tanla is closed above 19% up, while Nazara about 6.5-7% up. So yes, despite a bit of an overhang of what happens next, and we'll have that for you tomorrow morning on the India Market Open, what exactly the Fed said, did not say, between the lines, what it meant. But even in a sense, beyond that overhang, the recovery is something which is heartening and displays that kind of strength in this market. Sudeep, one last comment from you before we wrap up on the kind of close we've seen today and the message it sends out.
I think, it's a good close considering where we were midday. And of course, a bit of nervousness ahead of the Fed policy announcement was expected, particularly from the FII side. So it will be interesting to see the FII numbers and the, in the option side as well afterwards. But by and large, continue to maintain our positive view. We need to also start looking at FMCG. That is my view firmly. That's an evergreen story, and they have been down and out. Rural consumption have been nothing to talk home about. But I think it's a matter of time before rural consumption picks up, and companies like HUL and Dabur start performing or outperforming many other sectors and companies.
Sudeep, this was really special having you in our launch week. So thank you so much for that. We just hope that we get to talk to you more and get your insights for us and for our viewers. Thank you so much for today.
Thank you, Niraj.
Right, that's the view from Sudeep Bandyopadhyay, a veteran in the markets for such a long time, and great to get his perspective as well. And with that, we've come to an end of this show. From Tamanna, me, and the team that has put India Market Close together. Thank you so much for tuning in. Stay tuned to NDTV Profit.